So, dear colleagues, today officially marks the beginning of an exciting new trading week ahead. Let's take a look at the market from a wave analysis perspective. Let's start with the gold market. Let's look at gold. Currently, the predominant higher time frame being analyzed for gold is the daily time frame. We are creating the first impulse and second correction. Next is the third wave impulse, which is not yet complete. I anticipated the completion of the third wave last week at the breakout point of this ascending channel, considering the possibility of selling during the forthcoming fourth wave correction. Many traders likely anticipated that gold prices should have already stabilized. After all, how much longer can they continue to grow? We reached a peak of 1618, having already surpassed all historical highs, and ideally we should have seen a correction by now. This is how the market operates. The financial market can move unpredictably in any direction. It can correct inaccuracies by as much as 10% or even up to 50%, so there should be absolutely no questions or doubts about that. This is the market. The market may rise endlessly but can suddenly correct itself. And the main thing is not to miss it. That's precisely why, in accordance with the established trading plan, we are currently staying out of the gold market. I have not made any sales, and we also refrained from purchasing gold last Friday, as it's a day when I generally prefer not to engage in trading activities. Next, on the 4-hour timeframe chart, we observe a model consisting of the first upward impulse, followed by a second downward correction, then a third upward impulse, and finally a fourth downward correction. Next, I will carefully stretch the first subwave to enhance its appearance. Guys, those who have read Elliott's insightful book are already familiar with the concept of stretching. Make sure to read about what stretching is. It can occur specifically in subwaves 1, 3, or 5 only. Yes, most often in the third wave, but it can happen in any wave. This was currently a stretch. We have completed 5 steps, then the second correction, and are now on the third. Additionally, through this particular model, there is likely to be even more substantial growth within the fifth wave. What can be noted here is that the third wave was the longest. The fifth wave will, of course, be shorter than the third wave in length, so we will wait for the completion of 345 and then look for a selling entry point. So concerning gold, everyone, save your money wisely now and avoid selling your gold. Today, many individuals, including Sophia, who mentioned it in the chat, have shared that they purchased gold, and Yulia also joined in the buying trend. Great job, everyone performed well. If you are currently holding sales, I believe this may not be the most advantageous time to sell gold. By the way, this morning, a trader sent me a message regarding his trading account, mentioning that he successfully sold some gold. He said he sold gold here, and 2 hours later he had a margin call. The individual simply wanted to sell his gold because he believed that its price had already reached a peak and that it was now the right moment for it to decline. As a result of the unfortunate situation, he lost his deposit, and honestly, I don't know, he was quite upset. This is how easily one can lose a deposit on gold, especially trading against the trend and not understanding the logic of technical analysis. That is, without possessing any fundamental knowledge about when to sell and where to appropriately set stop-loss orders. He simply decided to sell it here because he believed that gold had no other potential places to appreciate and grow in value further. But take a close look at this gold, everyone. Observe how we have seen significant growth here, and I believe many traders decided to sell their gold at this point, gaining valuable experience in the process. Next year, I am confident you won't repeat such mistakes by selling against the trend. You should sell when there is some confirmation, for example, a breakout of a channel. Channel breakout signifies a wave change. As long as the price is moving within the channel, it continues the fifth wave and the upward movement can continue. Therefore, gold is currently out of the market for trading. Unfortunately, it hasn't been purchased here on Friday. There is some really good news, guys, about silver. Just to mention, I forgot to provide the entry points for silver trading on Thursday. On Thursday, we bought silver right here. We set the stop loss here, and today our take profit target was reached. Basically, we worked on this position for silver. In a closed channel, I clearly outlined the entry point for discussion, and I realized that while we might not be able to secure the silver outright, at the very least, we could make a concerted effort to attempt to capture the silver opportunity presented to us. We executed this trade exceptionally well, and I sincerely congratulate everyone present here. We quickly accumulated an impressive total of 150 points in just 2 days. It was a very good trade. The 5-wave pattern continues here. Let's move on and take a look at the cryptocurrency market. Today, let's consider Bitcoin in the cryptocurrency market. I currently hold open buy positions in Bitcoin. Do you remember my previous live streams? I'm holding buys for the fifth wave. On the daily time frame, an upward trend is forming here. First impulse, second correction, third impulse, fourth correction. Here, we experienced a notable breakout of the established channel, prompting us to begin purchasing at this point while maintaining a tight stop. We have a brief stop here, and we are currently focused on completing the fifth wave of our project. The fifth wave is typically positioned behind the fourth wave when a stop is executed, as there can be significant corrections of 70 to 80%, making it prudent to maintain the stop at this level for safety. Currently, in relation to Bitcoin's price movements, I believe we are in the process of forming what is likely the initial subwave, while this may very well represent the subsequent subwave in the overall pattern. As soon as the second subwave ends, we may start 345, which will be a continuation of the fifth wave. For the time being, I will designate this as wave number 1, while I will refer to this as wave number 2, which is the second wave in the sequence. Here we apply the fundamental principle that the impulse consistently surpasses the correction. If the market correction significantly exceeds the initial impulse and we hit our stop loss at this point, I will need to reevaluate the situation for a deeper market correction. For now, this current movement appears to be corrective to me, while previously this was clearly the impulse. Most often the market moves this way, meaning it moves with an impulse then gives a correction. As a result, it effectively eliminates the sellers who had previously pulled their stop orders. Then the subsequent impulse occurs, and once more it knocks out all the eager buyers, depending on how deep the price drops. Then we will ascend once more, and there we will find a place to settle for a while. In general, daily charts, particularly as we analyze them within the D1 context here, typically take around 2 to 3 months to fully play out. However, in the best case scenario, it could occur in just 1 month if we move swiftly. So don't expect to see quick profits here either, because this situation is rated a 5 on the daily time frame scale. This is not just a brief 4-hour time frame, so I will continue to hold my investment in Bitcoin and patiently wait for this market correction to fully complete before making any decisions. I don't see any significant point in selling here. I simply don't identify any setups that would justify a sale. On the 4-hour time frame chart for Bitcoin, we observed 5 distinct waves moving downward, followed by a corrective ABC pattern. In this ABC correction, we can also clearly identify and draw the first, second, third, fourth, and fifth waves for better analysis and understanding. And this was already an ABC correction for us. So this might have been the first subwave, this the second correction, and then we will have 3, 4, and 5. We might continue trading within this specific structure as we progress towards the overall trend, aiming for the completion of the fifth wave. If I weren't closely analyzing the daily time frame, I might not fully grasp or appreciate the overall picture of what's truly happening here. And I might have already begun the process of selling my Bitcoin down here at this lower price. But since I understand that on the daily time frame this is the end of the fourth wave, it all leads to the beginning of the fifth global wave. It will all go through steps 1, 2, 3, 4, and 5, so this correction is indeed appropriate. So for the time being, we will patiently wait for this market correction to conclude, and essentially we have already secured liquidity here. We took liquidity here. I don't know if we will reach these levels or not, but for now I am holding my buys. So let's keep an eye on the updates of the wave analysis. Next, guys, let's move on to the next instrument, Ripple. Ripple, guys, remember we also had a buy. We bought this coin. So today, take a moment to observe the downward movement once again carefully. I don't know if some news came out or what they're saying in the news about what happened here. But overall, it seems like all the buyers who were present here got completely wiped out. But I had my stop loss set according to my detailed wave analysis just behind the key level. And it literally did not reach the target score by just 5 points. So always try to place stops behind levels. These are the most reliable stops where the price is significantly more likely to bounce back upward if it reaches that specific level. You will have at least a few opportunities, such as in this case, where it may not be a breakout but rather another bounce. That's why I'm also continuing to hold my Ripple purchases. Here, let's immediately address the most important thing, the risk per trade. My risk assessment on Ripple. I took a risk on Ripple amounting to $9.20, which represents 1%. My profit is $7,000. So that's 1 to 7. Position 1 to 7. If Ripple manages to receive support from this level once again, the team still has a viable chance to strengthen their position and move forward positively. We can continue to grow as a company, but we will do so through a model that effectively tests the psychology of all traders. Those traders who had their stop losses set, those who set their stops correctly above the level are still in the market. There is still a glimmer of hope for growth. Those traders who were stopped out and decided to buy here now find themselves in a challenging position, as they have little opportunity to regain their losses, leading to a tough decision on whether to re-enter the Ripple market or not. That's the reason why Ripple operates the way it does, everyone. Market dynamics persist. Just remember, I had approximately $1,000 in profit right here in this very spot, okay? When today, quite literally in just one day, we experienced a significant downturn. Ultimately, all profits have dissipated, leaving the market essentially stagnant. But that's just how the market operates, full of unpredictable fluctuations and changes. So it may not always be as smooth as you would prefer it to be. There will indeed be such challenging periods, and this will thoroughly test your psychology, revealing what you'll do in various situations. In my case, I'll just hold either a stop or a take profit and keep working with other instruments. So let's move on, colleagues. The next instrument is gas. Let's take a look at gas. Today, everyone, my stop loss for gas trading was triggered, and as a result, I currently have no open positions at all. Remember, I had a buy position on gas. We bought gas right here. I had my stop set here. I ended up getting stopped out today for a loss of $600. Overall, the trade entry point was identified here, the stop loss level was set here, and the take profit target was indicated here. In principle, we could have achieved a 1-to-1 profit, but since we typically operate on a 1-to-2 or 1-to-3 basis, we reversed our approach here and broke the level today. That's precisely why this gas trade ultimately became a losing one. You have to accept that. Losing trades are an inevitable part of trading. It ultimately depends on how effectively you manage your risk and how you maintain a positive outlook while learning from each experience. So, moving on everyone, today I want to share a trading idea that I am currently trying to implement. I entered the market just an hour ago, and I think you should take a look at what is forming. Remember those meta stocks that captured our interest? Let's dive into the details. I've demonstrated to you that the first, second, third, fourth, and fifth waves are currently developing in this area. Then we have after the fifth wave according to the book. We have 1, 2, 3, 4, and 5, which collectively represent wave A. Then comes A, followed by B and C. This sequence represents wave B with 3 distinct waves. And now, the market, a week later, I actually showed this idea on Instagram exactly a week ago. However, we have not yet implemented this idea in the market because there has been no significant channel breakout to warrant it. Now the price is again at the channel boundary. I believe that very soon there could be a significant channel breakout, and I have already attempted to sell my position in anticipation of this movement. Not waiting for the breakout, of course, because it will be night and I will be resting, but I'm trying to sell. I think maybe by morning we will have a breakout because it looks like everything here might end with an impulse correction. A smaller correction than the impulse, a larger impulse than the correction. All the rules are followed, just a deeper correction occurred. Look at what this trading idea can bring you. If you attempt to sell in this market and establish a stop just above point B, you can analyze and potentially profit from this movement, known as wave C. The total financial risk I'm taking on this particular trade amounts to $608. For all such aggressive trades, I set a risk of 0.5%, not 1%. My profit from this position is $3,800, which indicates that the position has a risk-reward ratio of 1-to-6. If this idea proves to be successful, we can consider taking such a position, and it will result in a favorable 1-to-6 trade opportunity. You can almost start earning nearly 4% interest immediately. Therefore, I believe that Meta continues to be very relevant. Sales may happen. However, you see, it actually took another full 7 days to successfully execute this scenario in order to break through this channel and then go down. That's precisely why I continue monitoring. Guys, all my trading ideas that I have carefully built are currently either in progress or require some patience before acting. And waiting for a response or outcome can often take a week or even 2 weeks. Here I am diligently working on finalizing a sale. I sold. So everyone, another important financial instrument we have today is the British Index. Take a look. For the British Index, we specifically have this particular kind of analytical model in place. First impulse followed by 2 corrections within a triangle pattern. Then 3-wave impulse, 4 correction. Also it looks like a triangle, but so far there has been no breakout of the triangle today. I showed the hourly candle. I thought there would be a consolidation above the triangle, but we immediately had a pin bar appear, and as a result we went up. So essentially there is no entry. The entry occurs at the triangle's breakout. This is the moment when the candle opens outside the triangle pattern. A new candle subsequently opens and you begin focusing on selling. For the time being, we have decided to step back from the market. Let's hold off until tomorrow. Ideally, we should begin selling from this point in accordance with our established trading rules, aiming to sell during the breakout while placing a stop loss at 4 to effectively execute such a trade. Patience will be key in this approach. There may be a deeper market correction ahead, and afterward we will work from a more profound and stable correction. For now, regarding the British index, we are out of the market. It's also very important to work on corrections on breakouts, waiting for breakouts, because if you enter the market quickly without a breakout, it could lead to a market reversal. Currently, there isn't anything particularly interesting happening with the British index at this moment. Let's move on. The upcoming market we will discuss is the currency market. The first instrument to examine is the dollar versus the Canadian dollar. For this specific instrument, we currently have an ongoing trade in progress from last week for a buy position. Here on the daily time frame, the first impulse is forming, followed by the second correction, the third impulse, the fourth correction, and the fifth impulse. After this, an ABC correction is forming in the shape of triangles. Yes, a triangle. Most often, if a triangle repeats a previous triangle, there is a higher probability of a breakout again upwards. If the previous triangle had a breakout upwards and the market is forming a triangle again, there is a very high probability that there will be another breakout upwards, and the upward movement may continue. The correction will be notably deeper around the 61.8 level on the Fibonacci scale. We're retaining our Canadian dollar purchases for now, realizing a $300 profit. Overall, I can say that the last month has not been particularly trending for currencies. If you've noticed, there haven't been many profitable trades lately. Approximately 5 to 6 profitable trades occur weekly. Right now, we see that we are in some consolidations, uncertainty everywhere, and we need to wait for a breakout from this consolidation. Then trending markets will start, and we will begin to earn normally, quickly, and a lot in a trending market. Unfortunately, we won't earn much in such a market. We can attempt both selling and buying strategies, taking small amounts or closing out positions at break-even during market reversals. Overall, there is not a favorable or positive trend. That's why I genuinely hope this position will rise further, especially with a potential breakout from the triangle formation. Wherever there is a breakout from the triangle formation, we will aim to reach the 618 level on the Fibonacci scale as a significant target for price movement. Next, let's look at the 4-hour time frame for the Canadian dollar. In this scenario, there was a clear formation of one distinct impulse and two notable corrections. Next, we have this significant level from which we experienced the first bounce, followed by the second bounce, and then the third bounce, indicating strong support. Be sure to pay close attention to the critical levels, particularly on the daily and 4-hour time frames for better analysis. The more touches you make, the stronger your skill level becomes. This means a breakout will be stronger and the bounce will be too. So here, it seems likely that we experienced a breakout followed by a bounce, suggesting we may be able to move upward from this point, right? And somehow the initial first and subsequent second waves of a new uptrend will begin to start forming. So, we are holding buys on the Canadian dollar for now. Next, we move on to the next instrument, the dollar franc. For the dollar franc currency pair, we also have a buy open position. The overall trading idea presented here is that we identify the first impulse wave, followed by the second correction, then the third, fourth, and finally the fifth waves. We are currently waiting for a breakout of the established channel, which will enable the start of a more significant trending market toward the 61.8 level. We are attempting to make a purchase with a brief stop and are aiming for the anticipated ABC correction pattern. The market showed a modest amount of growth last week, yielding a total of $200 in profit so far. But for the moment we are standing still. It's unclear what exactly this movement truly is. Let's take a look at the 4-hour time frame. On the 4-hour time frame chart, we can observe a clear descending trend characterized by points 1, 2, 3, 4, and 5. Essentially, all the market waves have run their course. We have both the third and fourth waves completed, without exceeding the length of the initial third wave, while the fifth wave matches the length of the first wave. Theoretically, this could indicate a structure consisting of wave A, followed by B, and then C. So this will be a correction. That's why I continue to hold buys on the dollar franc, currently at $200 profit. The next financial instrument we will be focusing on is the euro dollar. This week, we are actively trading it. Please note that we currently have an open sell position that we established from last week's trading activities. The overall idea in this context is the formation of a consistent and regular correction. What is a regular correction? When you experience the initial impulse wave, this is followed by wave A and subsequently wave B, which surpasses the peak of the first wave. Finally, wave C occurs, which then declines and drops below the level of wave A, completing the sequence in this particular wave pattern. Typically, the initial indication of an irregular correction occurs when there is a false breakout beyond the maximum point reached by the first wave. First indication of an irregular correction. This phenomenon can only be detected this way. So you have identified the peak of the first wave, and when there is a breakout above this maximum, it prompts many investors to jump into buying during the anticipated third wave. However, then a false breakout occurs, which serves as the first warning sign of the impending correction in wave C. That's why we currently have open selling positions on the euro currency. Guys, the market is currently experiencing a significant rise on the euro. So for me, this specific model of a regular correction consists of 5 distinct subwaves. If the market is currently forming this specific model, it will progress through the stages of first, second, followed by third, fourth, and finally fifth. And then we will try to work out this wave C. For me, the recent upward movement in the euro currency is essentially a correction to the initial first and second subwaves observed within the larger wave C structure, because our irregular wave C consists of 5 subwaves. Let's also take a closer look at the 4-hour time frame for analysis. On the 4-hour time frame, we observed the formation of one clear impulse, followed by this entire sideways movement, which represents an ABC pattern, signifying the second correction wave. Then the upward movement goes 1, 2, 3, 4, 5, A3, and then a downward movement. Now the main question we have is this truly the fourth wave? So for traders, it might be that in the second scenario, the number 4 could remain as 4 and then potentially rise to 5 further up in the market trend. Last week we had the Fed, and I had a reaction to the fact that the Fed released these reversal candles, a regular correction on D1. And we started selling. I believe I will wait until tomorrow, perhaps just one more day, to carefully observe how the situation develops here. Maybe the market will create a significant movement that could influence my decision-making process. We will create a channel and then either enter buy positions along the channel or continue developing this specific type of market correction. I am seeking some support, perhaps through a new channel or approach that could potentially help complete the second subwave. This is crucial because if wave C begins from this point on the daily time frame, we would see a sequence forming 1, 2, 3, 4, 5, followed by 1, 2, and then progressing into 3, 4, and 5. This structure is essential for understanding the overall market movement and making informed decisions. And then the market could move in such a structure according to the daily scenario and regular type of correction. That's why, at this moment, it's quite a complex decision to make with many factors to consider. Whom to trust? Yes, for a 4-hour time frame, it will be 4 to 5. But again, if it goes down, the daily time frame will always be more important because we follow the daily time frame regarding that it was wave B and there will be wave C, but through 1, 2, 3, 4, 5. So this could very well be a possible scenario. Therefore, for now, I am holding on to sales while there is a loss. Additionally, I observe that someone has sold their assets and is indeed experiencing a loss, but overall, as I've mentioned previously, the situation remains quite complicated, and the two timeframes are in direct contradiction with each other. We need to exercise patience and possibly wait a day or two to better understand how the market behaves. At present, I'm monitoring the USD-CAD pair closely. If it rises based on the established correlation, then ideally we can expect that the EUR will fall as a consequence. Monitoring USD-CHF pair. USD-CHF is currently in a favorable buy mode. This scenario could be representative of ABC with wave B progressing, and soon after that everything will reverse direction. In summary, we will closely monitor the currency market. Everything appears rather uncertain, especially concerning the EUR-USD exchange rate. Just a quick reminder, everyone, I have an exclusive closed channel where I regularly share my detailed analysis on open positions, complete with daily updates. If anyone wants to join our closed group, you can message me on Instagram direct. I will outline the detailed rates for you, and you can consider trying trading on a medium-term basis, moving away from short-term trading strategies. I can also send you a helpful book on wave analysis specifically designed for beginners. Feel free to message me in direct or Telegram.